What if I told you that just $20 per week, the cost of a cup of coffee, could create a passive income stream of over $6,000 every month? Would you believe it? This is not a get-rich-quick scheme. It's a financial strategy built on the power of dividends, smart reinvestment, and most importantly, time. No need for luck, just discipline. No need for large capital, just the willingness to start early. In this world, those who know how to plant seeds consistently are the ones who reap financial freedom the soonest. So, how can $20 a week turn into a wealth machine worth hundreds of thousands? Let's start with what seems small. The psychological power of $20. Small but life-changing. A $20 bill can easily pass through your hands every week without leaving any impression. A Starbucks coffee, a quick meal, a trinket. But if you look further ahead, imagine, with that same $20, if placed in the right spot, at the right time, with the right strategy, it could become the seed of financial freedom, where you live off dividend income without having to work tirelessly. Ever thought you needed millions to invest? The truth is, you only need discipline and $20. What's amazing is that you don't need to change your whole life, just the way you use a very small portion of it. $20 a week equals 2.8 cents a day, less than a bubble tea. But the long-term impact of this decision is far from small. It's the beginning of a powerful growth cycle. Cash flow, investment, reinvestment, passive income, freedom. What you need is not more money, but a smart investment system, where each dollar has a purpose, a mission, and keeps generating value. Don't underestimate the small steps, for it's the tiny daily habits that will shape your financial destiny in the next 10, 20, or 30 years. The issue is not how much capital you have, but whether you have a clear, consistent, long-term strategy. The power of $20 a week lies in perseverance. It's a commitment to yourself, a declaration that you will master the game of money, step by step. Start small, but finish big. That's how wise people build sustainable wealth. Decoding dividends. The cash machine without selling shares. Dividends are the profits companies pay to shareholders as long as you own shares. The best part? You don't need to sell the shares. You still hold the underlying asset, and cash keeps flowing into your pocket. This is the concept of income without depletion. Income without draining your resources. And the more shares you own, the larger the dividends you receive. It's a reward for patience and the strongest asset growth engine in long-term investing. For example, if you own 100 shares and each share pays $1 a year, you'll earn $100 a year, completely passively. As the company increases its dividend by 10% each year, the next year you'll receive $110, the following year $121, without doing anything more. Most importantly, you don't need to play the buy-sell game to generate profit. Dividends are real, consistent cash flow, and you can live off them. If you build your investment portfolio smartly, focusing on businesses with stable dividend growth. Especially in volatile markets, dividends act as a safety net. While stock prices fluctuate, cash flow remains steady. This provides peace of mind and discipline in investing, preventing panic when the market dips. The more quality stocks you own for the long term, the more you transform from an investor into someone who hires money to work for you. That's when money keeps flowing into your account every quarter, steadily and growing bigger. Overspending. The high cost of image and ego. You can afford the $35,000 car, but do you really need it? Or is it a trophy for your ego? A silent way of saying, I've made it? Many people spend not for value but for validation. They're trading wealth for image, and they don't even realize it. The truth is, every time you overspend beyond necessity, you steal from your future. A $10,000 car gets you from point A to point B, just like the expensive one. But that $25,000 difference? Invested wisely, it could grow into $500,000. Ask yourself, are you buying freedom or just pretending to have it? Financial growth doesn't come from spending more. It comes from keeping more. And what you keep, you must invest. Luxury is not the enemy. Mindless consumption is. The appeal of high-end goods is emotional, not logical. When you buy to impress others, you relinquish your power to people who aren't paying your bills. That upgrade might cost more than money. It might cost you your dreams. Choosing simplicity over show isn't sacrifice, it's strategy. Real success isn't loud. It's quiet, disciplined, and intentional. And often, it's driving an old car while building a net worth that turns into real freedom. Spending smart doesn't mean living poor. It means living with purpose. Every thoughtful decision moves you closer to the life you want, while reckless ones push it further away. Financial maturity is knowing the difference between desire and necessity, and choosing long-term gains over short-term validation. Every time you resist an unnecessary purchase, you're not depriving yourself. You're investing in peace of mind, options, and independence. Don't let society define your worth by what you own. Define it by what you're building. Spend less on appearance, invest more in substance. That's how true wealth is created. Stock selection criteria. The secret to building a cash machine portfolio. For dividends to become a reliable and growing source of income, you can't pick stocks randomly. You need a clear set of criteria, and this is the foundation for building a portfolio of stocks that generates sustainable passive income. Keep in mind that not all stocks with high dividend yields are good. Some stocks offer 10 to 15% dividends but then go bankrupt. What you need are stable stocks. Not only do they pay regularly, but they also increase their dividends over time. The first criterion is dividend yield. This is the ratio between annual dividends and stock price. A good yield typically falls between 2 to 5%. Anything below 1.5% is too low to build cash flow, while above 6% could be a warning sign. The company may be struggling and needs to attract investors. Look for companies with stable yields over several years without fluctuating wildly. Yield should not be sky high, but stable. That's the solid foundation you need to build real financial freedom. The second is dividend growth year over year. A company that increases its dividend by 10% per year is like giving you a raise without you having to work overtime. Look at the compound annual growth rate, the HAR of dividends. The higher the number, the faster your dividends will grow. Companies like Lowe's and NetEase have dividend growth of nearly 18% per year. After 10 years, your dividends will be many times higher than they were initially, even if the stock price remains the same. The third is the financial stability of the company. Companies in essential sectors like grocery stores, utilities, and warehouses tend to have stable cash flows. Regardless of economic fluctuations, they can maintain or even increase their dividends during a market downturn. This acts as the defensive shield for your portfolio. You don't just need good dividends, you need dividends that are sustainable at all times. Prioritize companies with steady profits, low debt, and strong financial management. Lastly, consider diversification and capital growth. Dividends are a source of income, but stock prices should also rise over time. A good portfolio should not all in on one sector. Mix real estate, ETFs, retail, and technology. ETFs like SCHD offer stability and lower risk, while real estate investments like Cube provide high yields with little competition. Tech stocks like NetEase offer strong growth. A balance of dividends, growth, and stability will turn your portfolio into a three-engine money-making machine. Powerful, durable, and long-term. Analyzing a specific 5-stock portfolio, fueling your cash flow machine. Let's first look at a stock from the unique real estate sector, CubeSmart, specializing in self-storage. During market volatility, people might sell their items, move homes, or relocate offices, but the need for storage remains. With a 4.89% yield and 14.06% dividend growth, Cube provides stable and consistent income. The stock price also increases by 5.87% each year. This is a true dividend cash cow, providing regular cash flow with minimal cyclical risk. If you want diversification but are not skilled at stock picking, SCHD ETF is a strategic choice. This ETF invests in high-quality dividend-paying companies across various sectors like healthcare, consumer goods, and energy. With a yield of 3.53%, dividend growth of 11.4%, and an average stock price increase of 6.23% per year, SCHD offers stability and minimizes portfolio risk. It's a solid foundation for any investor, especially beginners who want to play the long game consistently. Next is Kroger, KR, the grocery retail giant. Even during economic downturns, people still need to buy milk, rice, meat, and vegetables. Essential sector stocks like Kroger provide absolute stability for dividend income. With a yield of 2%, dividend growth of 13.58%, and a stock price increase of 4.8% per year, this stock may not be flashy, but is incredibly practical. It acts as the defensive core in your portfolio, protecting your cash flow during market fluctuations while still providing steady growth. For long-term growth, Lowe's is a goldmine in the home improvement sector. With a yield of 1.87% but a dividend growth rate of 17.99% per year, this is a stock you buy today to reap the rewards 10 to 20 years from now. When the real estate market is tough, people tend to renovate homes instead of buying new ones, helping Lowe's grow steadily. Its stock price increases by 12.72% per year, combined with dividends, making Lowe a double growth pillar, both generating income and appreciating in value. Finally, an explosive unknown, NetEase, NTE, the Chinese tech and gaming giant. Not only does this stock provide good dividends to 5.7% yield, but it also offers exceptional growth. Dividends grow at 17.29% per year, and the stock price increases by 17.78% annually. NTE operates in the rapidly growing tech industry and knows how to share profits with shareholders. This is the accelerating arm in your portfolio, delivering breakthroughs while the rest remains stable. In summary, the portfolio includes 5 stocks: Cube, SCHD, KR, Lowe, NTE, creating a strategic balance of high dividends, sustainable growth, and strong price appreciation. The average dividend yield is 2.97%, the average dividend growth is 14.79%, and the stock price increases by 9.48% per year. This portfolio is chosen not to make you rich overnight, but to take you toward financial freedom through the most sustainable and intelligent route. The power lies in the coordination. Each stock plays a clear role and supports the others, simulating cash flow from $20 a week to $6,085 a month. Now it's time to turn theory into reality. You hold in your hands a powerful financial weapon, $20 per week. It's not a large amount, but with time and a dividend reinvestment strategy, it can become a massive passive income stream. Let's assume you consistently invest $20 a week into the above 5 stock portfolio, with an average dividend yield of 2.97%, dividend growth of 14.79% per year, and a stock price increase of 9.48% per year. The financial picture will change dramatically over time. After 5 years, you will have invested a total of $5,200. But thanks to the power of compound interest, your portfolio will be worth approximately $6,732. At this point, you can start feeling the dividends coming in regularly every quarter. After 10 years, with a total investment of $10,400, your portfolio will be worth nearly $20,000. Annual dividends will also increase significantly. This is when the leverage begins to form. You'll realize that you're no longer dependent on your own money, but money is making money for you regularly every month. After 20 years, with a total investment of $20,800, the portfolio could reach $182,000. And this is when you truly enter the partial financial freedom zone. You can withdraw dividends to cover expenses without selling any shares. The annual dividends will be around $18,000, roughly $1,500 per month. It's enough to cover basic living expenses or relieve work pressure. This is when you realize small discipline today, big freedom tomorrow. And the peak, after 30 years with total capital of $31,200, the portfolio could reach $675,642. Of that, $317,000 comes from stock price appreciation and $357,000 from reinvested dividends. You've not only built an asset of nearly $750,000, but also created passive income exceeding $6,300 a month, the same as many CEOs earn. It's the reward for persistence, strategic thinking, and disciplined action. You don't need to win the lottery, just consistently invest $20 a week and follow the path of the wealthy. Important notes: don't let your dividend dream be shattered. There's a harsh truth: many people quit halfway. Not because they lack money, but because they lack long-term vision. Don't expect results after just a few months. This is a 10, 20, 30-year game. Resist the temptation to spend dividends early or sell shares when the market corrects. Staying disciplined is the only shield that will protect you from fear, greed, and wrong decisions. Avoid stocks with unusually high dividend yields. These are often financial traps. Don't rush into illiquid stocks or those with no history of dividend growth. Also, review your portfolio 1-2 times a year. Rebalance when necessary, but never chase dividend waves. Success in this strategy is not for the impatient, but for those who bravely plant seeds in silence and wait for the harvest. Practical advice: start in 15 minutes. There's no better time to start than right now. The first thing, open a reputable investment account. In the US, you can use Fidelity, Charles Schwab, or Robinhood. In Vietnam, you can use TCBS, VPS, FIDT. Next, set up an automatic $20 week purchase order called DCA, dollar cost averaging. Don't worry about picking the wrong time, because time is the factor you control, while the market is not. Choose an ETF like SCHD if you're just starting, or combine it with Cube for higher dividend yield. Then activate DRIP, the automatic dividend reinvestment plan. And just like that, you're in the game. Every week you plant a financial seed, every quarter you reap dividends, and every year your assets grow. This is not a dream, this is a practical action plan, and it only takes 15 minutes to start. In conclusion, you don't need hundreds of thousands to begin your investment journey. All you need is $20 a week and a solid strategy. Dividends are not a fanciful dream, but a real money machine for those who are persistent and visionary. When you plant seeds every week, you're laying the foundation for freedom, a future where money works for you. This journey starts with small actions. But if you begin today, you can transform your entire financial future.